This week's data included the Easter holiday week. So, inventory, new listings, and the pace of new contracts started all took a breather from their growth pace this week. Each of those notched down from a week ago and compared to a year ago. This is a holiday effect, a 1 week holiday effect, and should be all reversed back into the year's growth trend by next Monday's report. Easter isn't the biggest holiday impact on the housing data, but a little pullback is measurable in most years. The comparisons for next week will be much easier because Easter was later in April last year. And so the data next week will show growth from this week and over a year ago. And here's how 2024 is shaping up. There are now more listings, more active inventory, and more sales than a year ago. What's notable is that last year there were more immediate sales, fewer withdrawals, and fewer price reductions. So the way to look at this is that the indicators for demand for homes haven't really picked up from a year ago. Mortgage rates haven't fallen. If anything, mortgage rates are higher than they were a year ago. So demand isn't really increasing. Sales are increasing because supply is increasing. And we are slowly emerging from a supply-constrained market. Sales in 2023 were held back because there were not enough homes to buy. And as sellers gently re-enter the market, more home sales can happen and are happening. At the same time, this flat demand with more supply means there is less upward pressure on home price appreciation than there was a year ago. We finished 2023 with like 3 to 5% home price appreciation, and it looks like 2024 will be flat on home price gains. So we'll explore that in today's video a little bit. By the way, these trends are not even across the country. Some markets are moving way faster than others. So next week, Thursday, April 18, is our monthly webinar. And we will get to dive into the latest details, all the leading indicators, and spend all the detailed time on the local markets. The local story is very strong right now, and it's something to pay attention to. There's a link in the description below to register for that webinar. Click that to save your spot. These are limited to 1,000 attendees each month, and we get way more than that who want to join, so you can still save your space. Click that link in the description to register for next week's Altos webinar, Thursday the 18th. And at Altos, of course, we track every home for sale in the country every week. We track all the inventory, the supply and the demand, the pricing and the changes in that data, all the sales, and we make it available to you before you see it in the traditional channels. So you can see it immediately as it happens. I'm Mike Simonsen. I'm the president of Altos Research, and let's take a look at the details of the U.S. real estate market for the first week of April 2024. There are now 513,000 single-family homes for sale on the market. That's actually 1% fewer than a week ago. The decline is due to the Easter holiday last weekend. Inventory will climb again with this week's coming data. There remain about 25% more homes on the market now than a year ago. That's 100,000 single-family homes more for sale right now than a year ago. Some of the markets like Southwest Florida have really big inventory gains. Others like Boston are just barely coming off the pandemic lows, but they're all gaining over last year. So in the coming week, after this coming week, it'll be really interesting to watch if the year over year changes slow down at all. So in 2023, inventory started finally climbing in mid-April. So now they'll be climbing in tandem. I expect our current inventory growth path to continue for a few more months. Last year, there were so few sellers each week, and now we observe 10 to 15% more sellers each week coming to the market. So that growth looks poised to continue. In this chart, each line is a year's active inventory curve. I've been sharing this view with you lately so you can see how the curve this year has been separating from last year's inventory levels. Last year is the red line here. This year is the dark red. And it sure looks like this gap will keep growing in inventory. One reason we know that inventory will keep growing is that we can measure the pre-listings. These are marketed as coming soon. They're not actually listed for sale yet. The coming soon listings this week jumped by 26%. They're 34% more coming soon properties than a year ago when it was really low. So that tells me we will be back on our inventory growth pace with just this 1 week holiday dip. In the new listings data, you can most clearly see the impact of last week's Easter holiday. Only 55,000 new listings in this week's data for single family homes. That's down 8.5% for the week and actually was 1.5% fewer than a year ago. So the Easter holiday was later last year. So the next week's comparison will show a big jump in weekly and yearly with two easy baseline comparisons. Because of the mismatched holiday weeks, this was the first week of annual decline in new listings volume since way back at Thanksgiving. In other words, seller growth continues. It's not huge, but it is real growth. And except for a mismatched holiday comparison, it would have climbed this week too. We've now had consistently more sellers easing into the market. I haven't seen anything in the data that indicates this will change. In this chart, each line is a year with a new listings count each week. The dark line is this year, and it has been running consistently more sellers each week than a year ago. You can see the Easter drop there, so that'll pop back up in next week's report. The gray lines are past years, and so even as inventory builds in some parts of the country right now, there's no general surge. There's no sign of an imbalance with too many sellers for the current demand levels. You can see the gray lines might be 80 or 90,000 new listings for single family homes each week in April in old times, a normal level. So we hopefully will get close to 70,000 next week. This Easter holiday, we only had 55,000. So dipped, we'll be back next week, hopefully close to 70,000 new listings next week. The holiday last weekend also pushed a few contracts out later. So the new pendings dipped this week too to just 65,000. So that's 65,000 single family homes that took offers and started the sales process. There are another 15,000 condos that got offers this week. So that's down 6.5% from last week. It's just fractionally fewer than the same week a year ago. Last week because April was later in the month. So in fact, the sales numbers this holiday week were as good as the non-holiday week a year ago. So next week the comparison will be easy. So we'll see a big jump in the new offers, completed compared to this week and compared to a year ago. And that's an encouraging sign for continued growth in home sales over 2023. Just like the listings volume, the sales volume is definitely increasing. I don't see any sign of that trend changing. Like I said, if we have I've said this a bunch, if we have a big jump in mortgage rates, that would slow down the sales process. Now, in fact, the 10-year yield has been climbing in response to continued strength in the economy. Seems like every macroeconomic data point we get makes it less likely that the Fed's going to cut rates soon. Those data points drive the 10-year higher, which puts pressure on the 30-year mortgage rate. The good news is that the spread between the 10-year and the 30-year mortgage rate has been compressing. So even though the 10-year is up a lot in the last week, the mortgage rates are only up a little. That compressing spread is one reason that mortgage rate forecasters keep anticipating lower rates for the coming year. Will it happen? I don't know. We haven't seen mortgage rates falling yet. So the good news is that this housing market will continue to expand even if rates are just stable. They don't have to fall. If they jump, we'll see the slowdown again. Meanwhile, homes are spending just under 40 days in contract right now. That's less than last year at this time when it was closer to 50 days. Fewer days in contract implies a more resilient market. They're more likely to close and less likely to fail. It probably is also related to the increase in cash buyers we've seen this year. So if you're looking for bearish signs in the housing data, the days in contract is one you might pay attention to. Days in contract is lower now than a year ago, and it's ticking down as you'd expect for the season. So there's currently no notable bearish signals in that data point. But if it grows, that's the market weakening. At $395,000, the For the latest sales, the homes going into contract, home prices are up 5.7% from last year. In this chart, each line is a year, and we're looking at all the homes that go into contract in a given week, the pendings, the new pending data. Prices typically peak in May or June. We don't seasonally adjust these numbers anywhere. We're just literally counting everything. And these sales prices are only 2% higher than where they were 2 years ago. So at that time, 2 years ago, the pandemic boom was ending. Rates were climbing very quickly. Buyers were getting the last of their affordable payments, and the prices paid for homes really reflect that. So the light red line here is 2022, and you can see we're just about to pass the all-time high prices of May 22. And I want to point out that we're sharing pending sales data here. So this is the active market is actually shifting a bit differently. The median price of all the homes on the market, which is the data point, the price data point I usually share, it's actually lost ground since the beginning of the year. So the median price for all the single-family homes on the market now around the U.S. is $440,000. That's unchanged from a year ago. By that measure, home prices haven't climbed at all in a year. 0% home price appreciation. Last year, the tighter supply was leading to more upward pressure on each week on the market. And so by that measure, we started 2024 with 3% home price gains. And now that gain has eroded and we're back to 0. And so when I say that home prices are looking less bullish than the sales volume, this is what I'm talking about. So the asking prices are soft and now not showing home appreciation, price appreciation over last year. The sales prices are still showing their 5 to 6% annual gains that you'll hear in the headlines, though that, because of the leading indicators, may erode during the year. Keep your eyes out for that. So let's close today with the leading indicator price reduction. So the percent of the homes on the market with price cuts. Currently, 32% of the single-family homes on the market have taken a cut from their original list price. That's up just a fraction from last week, just a fraction. It's notably higher than last year at this time. There are more sellers now who have felt the need to cut their prices than actually any time in the last decade for looking at April's. And these are homes that are on the market now. They didn't get an offer, so they cut their price in April. Maybe they get an offer in May, and the sale closes in June or July. So we can see that weakness in the asking prices right now. Now, it's not a lot of weakness. It's not a lot of cuts. It's not rising super rapidly. The market doesn't appear to be deteriorating from here. And in this chart, you can see the light red line from 2022, which was starting to take off in April. And that was the moment that you could see how rapidly demand was plummeting as mortgage rates were rising. And we don't obviously see that now, not nearly as strong. It wasn't until a full year later that the headlines reported the year-over-year home price declines in Q2 of 2023. So this is a leading indicator that maybe 3, 6, 12 months out in the future. And that's why we do this data work every week. The market is trying to grow, but home buyers are obviously sensitive to the cost of money. And if you aren't watching the data each week, you're probably behind the curve. You probably have buyers and sellers who have no idea how this market is changing, and they need to hear this data from you. If you're in Boston, it's a very different message from somebody who's in Florida right now. So if you need to help buyers and sellers see the actual data, you should join us at Altos Research. Go to altosresearch.com, book a free consult with our team, and we will help you know how to talk about the market with your clients and prospects today. There's a link in the description below. Click that to join us. Let's get started.